and my dear colleagues. I, C.R. Unnarang, welcome you all on behalf of Surat branch of WIRC of ICEI. As you all know that Shriram sir had already taken a session at Surat branch on Zoom webinar on import of goods under GST law. And it's our pleasure for us that he is again with us on another topic, import of services under the same law. But before we move on to the session, I would like to introduce our today's speaker, Shriram sir. Shriram Kaza sir is basically MCOM with LLB. He is having 30 years hands-on experience in all the fields of the indirect tax and its allied subjects, central excise, service tax, custom, foreign trade policy, GST, EOU, SEZ, FEMA, state prohibition and excise, narcotics act. He has authored various articles on indirect taxation, which are published in renowned publications, and has also provided more than 100 seminars on indirect tax subjects across the India. He was Regional Advisory Committee member for Central Excise and Custom and Service Tax Baroda. Throughout his career, he has worked as a head indirect tax in reputed corporates L&D, Godrej, Thapar Group, General Motors India, Alembic Pharmaceuticals Limited, and is currently working as a VP, Vice President Indirect Taxation at Intas Pharmaceuticals Limited, Ahmedabad. With this word, I welcome Shriram sir. Over to you, sir.
Yeah. Thank you, Arunji. First of all, thanks to participants and Ishwarji, Chairman of the Institute, Naveenji, Pooja Ben, Rahulji, Arunji, and thanks to Santosh Bhai and Murtaja. It is always pleasure talking to Surat CA Institute because always I have observed this institute is having some highly positive vibrations. This is my second seminar with Surat CA Institute, and it's a very pleasure and nice weekend to all of us. First of all, I am working with Intas Pharmaceuticals as a vice president. So currently I am not an advocate, though I have done LLB. So which please noted. Because in the circulation also it is written as advocate. It is some mistake, bona fide mistake. So please pardon us. The import of services under GST is the today's topic. This topic we have taken with the intention to cover all the matters related to imports and exports under GST. We have already covered import of goods, as Arunji said. And today, our second topic is import of services under GST. This export imports bunch consists import of goods, import of services, export of goods, export of services, merchanting trade, deemed exports, SEZ, EOU, and refunds. So these all are different topics. So different sessions and different understanding and different timelines are required. Therefore, exclusively we have kept this import of services as a second separate webinar. I have tried my level best to provide you index so that at any point of time you can quickly locate the relevant topic subject at your convenient time. Services under GST broadly, we can say import of services, domestic services, export of services, non-taxable services, say outside India to outside India. But today our topic is the red marked one. You can see outside India is a location of the supplier, location of recipient in India. Therefore, it is an import of services. Legal section 211, the definition of import of services. So our topic is import of services. We are not dealing today related to domestic services, export of services, and outside India to outside India, anyway not taxable services. So there is no discussion. Import of services is provided by way of Article 269A in the Constitution of India. It says basically central government of India is having powers to levy and collect the IGST. Further, it says the tax is in the form of IGST, not CGST and SGST. IGST is having two different hidden underlines. One is CGST and SGST, but as a single line, it is IGST. The CGST portion goes to central government, that is hidden, it is not appearing. The remaining 50% of SGST portion goes to respective states or union territories. That's what Article 269A says. That means treatment of import of services is always interstate transactions. Always. Further, the parliament is having powers to decide the place of supply, time of supply. So, most of the import of services provisions, we need to refer IGST Act. Of course, for valuation purpose, for other procedural purposes, we need to refer CGST Act, CGST rules, because most of the sessions are applicable, though it is under IGST Act, but most of the provisions, there is a separate specific session under IGST Act. It says that the procedural part and other issues, CGST Act will prevail. That means we need to refer CGST Act. So we need to keep in mind, this is basically IGST is leviable in case of import of services, and Parliament is having powers to levy the tax and decide the place of supply, time of supply. And there is a apportionment between central government and state government. As I told you, there is a single line item of IGST having hidden components of two components. One is CGST and SGST. SGST goes to state and union territories. Keeping in mind of that 269A article, IGST Act Section 5 provided charging provision. So, in IGST, the charging provision for import of services is Section 5. It says, the parent act already told Constitution, it is interstate services. So, this is a replica of the 269A. It says, it is an interstate transaction. Further, it says, it should be paid under reverse charge mechanism. That means import of services, one has to pay under reverse charge mechanism. During our session, we will call it RCM. R stands reverse, C stands charging mechanism, reverse charge mechanism. Further, it says the recipient who has received the services, he is supposed to pay, liable to pay tax. Discharge is liability, as if he is the person paying the liable for paying the tax. That means the person who is receiving the services, import of services, he is liable to pay the tax liability under RCM as per notification issued by the central government. Similar notification is issued by the state government also, but import of services, as we have discussed, that is falling under IGST notification, that is called IT notification. Because IGST issues notifications, they put in bracket IT. If it is central government, then they put CT. So import of services is having notification, falling under notification issued under IT rate 10/2017. That is RCM notification. That's what charging provision says. RCM notification 10/2017 ITR says any service supplied by any person who is located in a non-taxable territory to any person other than non-taxable online recipient. That means any person located in the taxable territory other than non-taxable online recipient is liable to pay, discharge the tax liability. So having seen this, we need to understand where this, because this charging session says supply. This charging provision talks about supplies. So we need to refer what is the supply, what is the meaning of supply under GST Act. Whether it is GST means CGST or IGST, but supply has been defined in CGST Act, because most of the CGST provisions are applicable to IGST also, that we have discussed. So supply meaning section 7 says the relevant portion of import of services we are discussing. It says import of services for consideration whether or not in the course of furtherance of business is a supply. Further, it says the activities specified in Schedule 1 made or agreed to be made without consideration. Then we need to refer Schedule 1. Schedule 1 says import of services by a person from a related person or from any of his other establishments outside India in the course of furtherance of business. So, charging section says supply. Supply says import of services for consideration whether or not in course of furtherance of business. So, business is not important. In case of import of services, consideration is important. In case of related person or from other establishment, furtherance of business is important. In course of business is important. Consideration is not important. This we can see from tabular form I have given for simple understanding purpose. That means these three, 1, 2, 3, which is marked in red ink, are treated as a supply. One is any person, whether unrelated, related, or other establishments. When there is a consideration, business high, nahi hai, it's not important, but still it treated as a supply. If it is a related person, no consideration, you have received import of services from your related person, it is meant for business, it is a supply. If you have received any import of services from other establishments, that means distant person, no consideration, for it is for business, it is a supply. So these 3, 1, 2, 3 are considered as a supply. Remaining these 2, related person, no consideration, no business, no supply. That means, suppose you are USA person, distant person, or related person has given services to you for your CSR activities because it is not for business and no consideration. He has given you free of services to fulfill your CSR activities, no supply. Similarly, in case of import of services from third person, no consideration, whether it is for business or not, no supply. Say for example, you have received LinkedIn services 1 month free in your business, no supply. Suppose your third person, other than related and distant person, has provided any of your CSR activities purpose, he has provided any services, no supply. So only these three are covered: any person, related, unrelated, establishment, consideration, whether or not business, supply, related person, no consideration, in course of business, supply, other establishment, no consideration, for business, supply. That's all. Having seen this, we need to understand what is nature of supply. Nature of supply, we have already referred Article 269A, wherein it has been said that it is always interstate transaction. So, Section 7 of IGST Act says, because they need to provide law accordingly to meet the requirement of the Constitution, they say supply of services imported into the territory of India shall be treated to be a supply of services in the course of interstate trade or commerce. Because it is very important to understand exactly it is called interstate or intrastate. Second, it is important to understand to ascertain the charging of GST. So nature of supply is very important. Further, determination of nature of supply is interstate. So in case of import of services, always you need to pay IGST. Now we need to refer what is import of services. Import of services is discussed in section 211. It says supplier of service should be located outside India. Recipient of service should be located in India. Place of supply should also in India. That means one outside India, two India. Then only import of service will trigger. Supplier is outside India, recipient and place of supply, two conditions should be in India. Then only import of service will trigger. Otherwise, no. We will see different illustrations, examples, how in what circumstances it is import of service, what circumstances for the same example it is not import of service, that we will discuss. When we see that, we also need to keep in mind to qualify as a supply, there should be always two ingredients are important. Please note: sale, transfer, barter, etc. Consideration, consideration payable by recipient, business is not mandatory. Without consideration, related and other establishment, business is mandatory. This is talking about supply. We have seen what is import of services. We have just observed what is the meaning of supply. Supply always should have two attributes. There should be sale, transfer, barter, etc, etc, etc. Consideration always payable. Business is not mandatory. Then supply will trigger. Without consideration, in case of related and other establishment, business is not mandatory. Then also supply is triggered. Otherwise, no. Now, what we have discussed, we will see to understand what is the role and importance and role of the place of supply. Charging session says different ingredients. The ingredients are interstate, supply, service, reverse charge, recipient, notification for RCM in case of import of services. So the interstate ingredient which is mentioned in the charging session as per session 5.1 of session read with 5.3 of IGST Act, interstate says import of services. Import of services says the third already we have discussed, place of supply should be in India. Place of supply is discussed in session 13. So please note the entire crux for import of services is place of supply. Because charging session says interstate, interstate says import of service says place of supply. So without understanding place of supply, you cannot decide anything whether it is import of service or not. The total crux is import of service. Now we need to refer what is the place of supply. We need to understand that. Place of supply is mentioned in IGST Act, Section 13, related to import of services we are discussing. It provides international and cross-border transactions. Section 13 basically. It is not for domestic transactions. Section 13. That means Section 30 determines whether it is import or export. Please remember, it's very important to understand. One has to examine clinically each and every transaction. We should not apply our logic, our experience, our common sense to decide whether it is import of service or not. To understand import of service, the particular transaction is import of service or not, we need to apply clinically each and every rule, provision of Section 30. Every subsection we need to understand and we need to apply. We should not use our logic, common sense, and experience in case of place of provisions. This Section 13 is having subsection 13.1 and 13.13. 13.3 and 13.12 deals specific situations. 13.3 to 13.12. That means 10 situations specifically deals specific import of service transactions. Government decided, law decides whether the transaction is import of service or not. Not by you, not by our experience. If the 10 situations is your particular import of service is not falling under those 10 sessions, subsessions, then you need to refer 13 subsection 2, which is residual session. So there are 11, total 11 session. Further, 13 subsection 13 gives powers to notify place of supply. So this is only enabling provision. But for our purpose, to understand place of supply purpose, first we need to refer 13.3 to 13.12, that is 10 situations. If those your situation is not falling under those 10 situations, then you need to refer 13.2, that is a residual session. Please note, in case of import of service, the place of supply of service does not fall under the one specified under section 3 to 13 of IGST Act. Then the place of supply shall be location of the recipient of service as per section 13.2. that we will deal. So, government has given whether it is a import of service or not, as per place of provision service, they have decided. I have given table for your quick understanding purpose. But since we are dealing different examples under each and every session, so this you can just refer. I have given you in tabular form for your quick and ready reference purpose. Session 13 comes into play. Either service provider or service receiver is located outside India. This we have discussed. Place of supply provision section 13 are to be referred, and it is useful only determine whether it is a supply of service in India or outside India. Please note, charging section is section 5 of IGST Act, not section 13 of place of supply. But place of supply simply determines whether the particular transaction is import of service or not. That's all. It is not a charging session. It never determines you are liable to pay. It determines your service is falling in India, or it says your service is falling other than India. If it is in India, as already we have discussed, to India, supplier outside and recipient in India, place of supply in India, supplier is outside India, import of service. So, in case of import of service, always there will be only two situations: place of supply in India, this is interstate supply, and IGST payable under RCM. If it is triggered as a import of service, then you are liable to pay under RCM. Place of supply is outside India, then neither inter nor inter without RCM liability. That's all. So, once it is decided, the place of supply is in India, supplier is outside India, recipient in India, when all these three conditions are meeting, then import of service, then you are liable to pay under RCM. Simple. Any of these three, even one single event disqualifies, then no import of service. Simple. Now, what I have tried all session 13 subsessions, and I have tried wherever it is possible to give you one thumb rule purposes. I have segregated in 5 situations. Place of supply is always India. Take it granted. You did not much struggle. What is the place of supply? In 5 situations, this 1 to 5, place of supply is always India. That means you are liable to pay import of service under RCM. In one situation, place of supply is always outside India. That means you are not liable to pay any RCM. In 8 situations, there may be import of service in India, or it may so happen import of service may not happen because place of supply is outside India. So we need to more focus on this 8 also, because this 8, in one situation it may fall under India, in another situation it may fall outside India. So that we will discuss. But these 5 are always in India. You need to discharge your liability under RCM. Please note. In one situation, import of services, always there is no import of service. That we will see one by one. Illustrations. Section 13.2, we have already discussed residual provision. What I have tried for your quick ready reference purpose, I have prepared around 25 slides for giving these examples. What I have tried, I have given legal provision. I have mentioned legal provision. I have given example. I have given application of that provision, and I have given conclusion keeping in mind of that section 211 of IGST Act, import of services definition. So I have tried to put all these three as it is, import of services. Then I have given in bracket whether that situation is meeting or not, application, keeping in mind of this provision. Then I have concluded whether it is import of service or not. So that in future, you can simply, if you understand this concept, you can apply for any, you can deal any kind of transaction. You need not seek any advice from anybody. You can simply, if you understand the discussion what we are doing for 25 slides, you can go through, you can deal any kind of transaction in future. So again, I repeat, I have given provision, I have given example, I have given application, and concluded comment in manner of comment manner. So first we are dealing 13.2 residual provision. Residual provision says the place of supply of services except the services specified in subsection 3 to 13, because 3 to 13 are specific transactions. Government says for this transaction, the place of supply is this. They decides. So except those 3 to 13 transactions, place of supply is always location of the recipient. Further, it gives some proviso. It says, provided that where the location of the recipient of service is not available, then place of supply shall be the location of the supplier. We will see with example. Services are being provided by the advocate located outside India in USA to its clients located in India in relation to legal matters. Suppose आप USA एडवोकेट से आपका यूएसए का बिजनेस के लिए आपने सर्विसेज लिया, आपका बिजनेस इंडिया में है, इंडिया में आपने सर्विस लिया, बिकॉज यू आर हैविंग कॉर्पोरेट ऑफिस इन इंडिया, सो यू वांट टू अंडरस्टैंड, देयरफॉर यू आर टेकन फ्रॉम यूएसए एडवोकेट, your corporate office is in India. In that case, law says location of the recipient except 13 subsection 3 to 13. These advocate services are not falling under subsection 3 to subsection 13 of section 13 of IGST Act 2017. Thereby, you need to refer the residual provision section 13.2 of IGST Act 2017. That section 13.2 says location of the recipient is the place of supply. Now we will apply this example keeping in mind of this provision into import of services definition, that is 3.2 section 211 of IGST Act. It says the supplier of service is located outside India. Yes, in this situation, USA mein hai, and this provision says outside India, so you are meeting. Second, it says the recipient of service is located in India. Yes, recipient of service is in India. Your corporate office is in India. Place of supply of service in India, ये किधर से आया? Location of the recipient is the place of supply. This is residual provision says. So, location of the recipient is in India. Now, already we have seen this import of service definition. 211 we have seen outside India, supplier, recipient in India, place of supply in India. The same 211 I have copied in this example. These three are nothing but that. This I have copied in every place of our slide for these 25 slides. So 211 says supplier of service located outside India, USA. Recipient of service in India, place of supply in India. So two are India, one is USA. So this is perfectly place of supply is in India. You are liable to pay RCM. We will see example 2 in different session. 13.3a. This is separate subsection. We are referring that. We are dealing that now. It says it is a proviso. This says provided that when such services are provided from a remote location by way of electronic means, the place of supply shall be location where goods are situated at the time of supply of services. This is law given in 13.3a. This law is given 13.3a. Now example, the France-based IT company renders services to the Chennai-based company from its office in France to start a machine equipped with digital software. Such machine is situated in the office of Chennai. That means आपका चेन्नई का ऑफिस में मिशन पड़ा है. You have requested France-based IT company to start the mission because you have procured from outside India and you do not have that technology or some problem. So therefore, you have requested France IT company भाई ये मिशन मेरे को चालू करने का है, कैसे करने का है, सिस्टम मेरे को जरा प्रोग्राम बराबर करवा दो मेरे को. France-based IT company situated in France. That fellow is not in India. That fellow has not come in India because he is dealing your startup of the mission by sitting in France. He is doing from France. And you are paying $100 for that. Say for example, $100 you are paying to that fellow. Mission is situated in Chennai. What provision says? Location where goods are situated. No, apply. Supplier of service is located outside India. Yes, supplier of France, it is located, is situated in France, and is dealing electronic means. Recipient of service located in India. Yes, Chennai-based company that we have discussed. Place of supply of service, mission is at Chennai that we have seen. So this particular provision says location where the goods are situated. Goods are situated in Chennai. So place of supply is in India. So whenever you pay $100 to the France company, that France fellow, since that France fellow is sitting in France and is starting your mission, is dealing with your mission so that your mission can be started operation. So when you pay $100 to that fellow, you need to pay IGST under import of services. Third example, session 13.6 we are dealing. This says where any service referred in subsection 3 or subsection 3.4 or subsection 5 is supplied at more than one location, including a location taxable territory, its place of supply shall be location in the taxable territory. That means we see no example. USA-based company renders demo services of the newly product launched by the company of USA in Delhi and in other countries, Nepal, Bangladesh. So that fellow, US-based company, is giving demo services for which you are taking the demo services. So you are paying $100 from India, but that fellow is giving to your company situated in Delhi, Nepal, and Bangladesh. So that fellow is giving 3 countries of your related, because you are having 3 base at Delhi and other factory at Nepal, other factory at Bangladesh. So you are getting some demo services from that fellow. Then law says location of the taxable territory. Now we will see supplier of service located outside India, demo from USA. recipient of service located in India, Delhi, Nepal, Bangladesh. These three are your factories. The place of supply of service in India, when that fellow is giving single invoice on your corporate for the demo services provided Nepal and Bangladesh, in that situation, you need to pay entire 100 rupees paid related to India, $100 related to Nepal, $100 related to Bangladesh, $300, but bill is received by you in India, but partial services went to Nepal, partial services rendered at Delhi, but you are liable to pay on entire $300 because you have received invoice $300 because your corporate office is in India. So you are required to pay IGST under import of services. We will see next. If you observe, I have put A4. A4 means it is already we have discussed. These all, whatever is mentioned in A, always place of supplies in India. I have tried to mention, I have to try to segregate for your quick reference purpose. What are the services are always at in India? What are the services always at outside India? What are the services in India as well as outside India? So I have segregated that already I have told you. The series is A. That means it is in India. Whatever we are discussing, whatever services we are dealing, these services are always treated as import of service and you are liable to pay. 13.7, it says, we are talking IGST Act. More than one state, each of the respective states or union territories proportion to the value of services separately. That means, for example, the USA-based company renders demo services to company of USA in Delhi and Gujarat. That means you are having two factories, two businesses. One is in Delhi, one is in Gujarat. You have requested USA-based company to provide demo services in India. In previous session, we have referred different countries. In this session, we are dealing different states, but different states in India. The law says proportion to the value of service you need to pay. Now let us examine. The supply of service is located outside India, demo from USA. The recipient of service located in India, Delhi, Gujarat. Delhi and Gujarat. The place of supply of service is in India, proportion to the value of services Delhi and proportion to the value of services Gujarat. So when you pay $100 to the USA fellow, suppose $70 are related to your big volume of Gujarat business, $30 is related to Delhi business, $100 IGST, RCM, Gujarat is required to pay 70 proportionately under RCM liability. Delhi is required to pay 30 under RCM IGST liability because law says proportion to the value of the services separately. Next session, subsession. We are dealing subsession of 13 of IGST Act. And we are comparing with 211 of IGST, meaning of import of services. And we are dealing provision. What is the provision? What is the example? And how it is applied? Application keeping in mind of import of services. So this 1, 2, 3 is import of services definition. This 13.12 says the place of supply of online information and database access retrieval services shall be the location of the recipient. Suppose you have taken LinkedIn services from USA. USA-based company renders online information and database access or retrieval services, OIDR services, for market research to Indian-based company. Then 13.12 says Place of supply is the location of the recipient in India. Supplier, we have seen ODR is in USA. Recipient, we have seen in India. Place of supply, location of the recipient. Location of the recipient where it is received, it is in India. Because we have seen USA based company to Indian based company. So, supplier outside India, recipient in India, place of supply is in India. Place of supply, how it is determined? It is determined due to this provision. Location of the recipient. That is losses. Location of the recipient is who? Indian. In India. Therefore, what is the place of supply? Place of supply is in India. So all three, there is no issue. So you are liable to pay for LinkedIn services when you have taken from outside India, USA to India. That time you are required to pay on $100 RCM IGST. It is very important to understand OIDR services. What happens? OIDR, just we are discussing what is OIDR to give you some quick understanding. OIDR services, when they provide to business, you need to pay under RCM. When OIDR services is providing to registered person for individual and government or agent, in that case, they pay under FCM. FCM means forward charge mechanism. But in general, when they are given to business, you are required to pay under RCM. Please keep in mind. Now, if you see, if you observe, this B is started. I have put B. This B, I have told you, B sheets already we have seen. I am referring to this table I have given initially. I have explained you. This A2, this A1 to 5 is always in India. Further, I have tried to segregate to give you some quick understanding. The B is always outside India, no place of supply. This I have already told. So now we are discussing that B. Banking, intermediary, hiring of means of transport up to 1 month. The loss is, in this situation, location of the supplier is the place of supply. That means, say for example, you have taken services, foreign bank, USA, providing banking services to Indian company, and change bank charges and charge bank charges to Indian company. Commission agent, in second example, is in foreign country, USA, charge commission to the Indian customer. Indian customer hides taxi in USA for 15 days. In these three situations, foreign bank, commission agent situated outside India, foreign bank is in USA, and taxi hide USA for 15 days. Why we said 15 days? Because up to 1 month only it is considered as place of supply outside India. If it is more than 30 days, then it qualifies as the import of service. In these three situations, the place of supply is always outside India. Now we will try to put in our 211 of IGST definition, import of services, like we are observing each and every transaction. These three, this is nothing but 211 of IGST Act. Supplier of service located outside India, USA. Recipient of service is located in India, that is India. Place of supply of services in India, that is not meeting, because place of supply loss is location of the supplier. Location of the supplier, where the location of the supplier, when you have taken services for banking company outside India, intermediary services, that intermediate fellow is situated outside India, and when you are hiring transport less than 1 month outside India, and when you have paid $100 for bank, $100 to intermediary services, $100, say for example, $100 to hiring transport. I am telling as an example $100. That does not mean it's $100 only for law. $100 or $1,000. For simplicity, I am talking $100. When you pay that amount, in all these three situations, place of supply is not in India, it is USA, because the proviso says location of the supplier is the place of supply. In all these three situations, location of the supplier is in USA. Therefore, no RCM, no IGST payment, liability, no liability. Now B is over. Now we are going to C. Already we have discussed. In case of C, I am going to previous slides. In these three situations, in these situations, 7, 8, 9, 10, 11, 12, 13, 14. In these 8 situations, I told you here I have mentioned 8. In these 8 situations, in one situation, it may so happen that place of supply is in India. In another situation, place of supply is outside India. That we will deal. Performance-based services. Law says when any services is provided on performance basis, the place of supply is always services supplied in respect of goods which are required to be made physically available. In case of goods, they say, in case of goods physically available. In case of other than goods, they say actually performed. So these two are different. One is actually performed. In case of goods physically available, where goods are required to be made, that we will deal. Machine sent from India for the purpose of repairs to USA. After completion of activity, goods are re-imported into India. The place of supply is what? The place of supply. Now we are applying those provision, the previous slide provision. This provision we are applying now. As the goods are required to be physically made available by the recipient of service in India to supplier of service in USA. That means you are sending your machine for repair purpose from India to USA. That USA fellow is repairing your machine and is returning back to India. Hope you are clear. Again, I am telling you. You are sending your machine for the purpose of repairs from India to your USA person. USA person is repairing and is sending back to India. You have paid $100 to that fellow. No, supplier of service is located outside India. Yes, machine is sent from India to USA. That we are aware. Recipient of service located in India. Yes, you are aware because you are the recipient of service. No discussion. Place of supply, in this situation, the proviso says goods which are required to be made physically available by the recipient is the place of supply. So machine physically made available at which place? USA. So place of supply is not India. As per this 211 import of services, these three we are discussing. 211 says supplier should be outside India and recipient should be in India and place of supply should be India. But this is failed. Place of supply got failed. Even one event fails, no place of supply. Therefore, no RCM, no liability. Second situation, we are referring some other provision of section 13(3)(a). Similar provision for different example. German company deputes its technician to Indian company for its machinery repair in India. That means the goods are required to be physically made available by the recipient of service in India to supplier of service in Germany. Place of supply located will be location where the service actually performed. In this example, German company deputes its technician. Suppose you are having factory at Surat. The machine is in factory at Surat. Hazira, you are having that machine. That machine got some problem. Since the machine originally imported from German fellow, you have requested that German fellow you to depute some technician. That German fellow has deputed his technician to your Hazira plant. And you have taken services from German fellow. That technician physically came to your Hazira plant and he repaired. He stayed 2 days and he completed his job. Supplier of service located outside India, German, yes. Recipient of service located in India, yes. Machine is situated in India, Hazira. Place of supply of service, machine physically made available at India. This is coming from the provision physically made available. In one example, we have seen it is not, but here he deputed the German fellow and physically that fellow has come to Hazira. Therefore, place of supply says machine physically made available. In the previous slide, machine physically made available at the USA. In this example, it is machine available in India. So here you are required to pay IGST under RCM. You are liable. Because proviso says where goods are physically available. In one situation, goods are not physically available because it is in USA. In another situation, goods are physically available at India. Thereby, you are covered under place of provision service in India. Next, we are referring different second proviso of section 13. 3A. Provided nothing contained in this clause shall apply when you import temporarily in India and export after such repairs. That means there is a one proviso created. Please note, one proviso has been created. It says if you that foreign fellow recipient supplies any goods to you, supplies means he sends any goods to you and you are repairing and you are sending back to that fellow. Then in that situation, when it is temporarily imported into India for the purpose of re-exports after repairs, then the original default section 13(2) falls because the section says supplier of service located outside India, Indian job worker, recipient of service is located in India, outside India it is USA. ये fail हो गया, first वाला fail हो गया, second वाला fail हो गया, third place of supply is in India. Nothing contained in this clause shall apply. That means default provision section 13(2) will apply. 13(2) says the person who has received. Let us see the 13(2) originally because it is very important to understand 13(2). Location of the recipient is the place of supply. Now, in this example, what we have seen now is recipient location is the important. Location of recipient kaun hai? Who is the service recipient? That fellow is in USA. Therefore, in case of any temporary importation for repair purpose and sending back to that fellow, in that situation, no RCM, no IGST payment. Now you can ask me, under which customs notifications this kind of repairs are possible in India and sending back to other country from India? The notifications, relevant notifications for repairs purpose are under Customs Act 134/94, that is repair purpose. 153/94 Customs, that is warehousing, repairs in warehousing. 158/95, the goods which you have exported and received back for repairs and sending back, because 158/95 deals manufactured goods by you. You have manufactured and exported. and coming back for repair purpose. After repairs again you are sending back. That deals 158 oblique 95. 32 oblique 97 customs deals job work notification. Some goods comes here for you have done some render, some job work, repair, and sending back. Under these 4 notifications, customs notifications, this provision will apply. Though directly it is not saying this is applicable for these 4 notifications, but these 4 notifications we can understand based on this provision when we compare with the Customs Act. So, under these 4 notifications, when you are importing any goods, repairing, sending back, and you are gaining $100, you whatever money you are paying on that, no service tax. Now we will see some other session related to 13 only. 3B, its talk actually performed physical presence is important. The law says in these circumstances, actually performance of the place, location where the services are actually performed is the place of supply. However, there is some small exception. They say in case of individuals, physical presence of the recipient or the person acting on his behalf with supplier for the supply of services is the place of supply. That we will see. Individuals, but for business purpose, needs to refer place of supply provision. Individuals, not for business purpose, needs to refer place of provision along with exempted entry notification, because some exemption also say given for individuals that we need to refer. We will see, for better understanding, we will refer with the actual application. Indian-based company has appointed London-based laboratory to test their medical fitness of London-based employees. Suppose your company is in India, you have appointed London-based laboratory for their medical fitness, and you are having business in London also, so those employees are in London. But to that London laboratory, you are paying $100. Then what is the position? Place of supply where the services actually performed, because physical presence of the employees require test medical fitness will be applicable. So supplier of the service located outside India, physical presence of the laboratory situated in London. Recipient of service located in India, place of supply of service, London-based laboratory for London-based employees. So when you pay $100 for your London-based employees at London-based laboratory, the place of supply is, government says, I am going to previous slide to understand the provision. It says on individuals, physical presence recipient with supplier for the supplier services. So in this situation, the place of supply is where the physically available of employees, that is London. So out of 3 situations of definition 211 of import of services, these 3, 1 is failed. Place of supply of service is not in India. Therefore, even 1 condition fails, it is not treated as import of service. No liability, no RCM. Now we will see reverse example, because as we have discussed, for C categories, I have given 2 situations. Both situations will apply. So in one situation, no liability. In another situation, there is a liability. So we need to understand, clinically, we need to examine each and every situation. Otherwise, we will miss the legal provision. The Indian Modeling Agency appointed UK-based beautification for beautification of their models in India. So you are having one association, one company of modeling business. You have deputed your models to UK-based beautification purpose. You have sent them for 1 month purpose. The agency is modeling agency is in India. Beautification codes they have rendered at UK. Now what happens? Place of supply is location of actually performed. Supplier of service is located outside India? Yes. Recipient of service located in India? Yes, India. Place of supply, physical presence of models is at India. So that beautification activity in this case is rendered in India. It is UK based company. You have paid under dollar payment, but that fellow physically has come in India and he has given service in India. That UK based company. So physically presence in the models at in India, thereby you are liable to pay IGST under RC. Location of immovable property. This is also place of provision section 13. It says where actually immovable property is located. We will see one example. Pros and cons, both examples we will see. There is one exception is also given that we will see later. Indian-based company has appointed architect of New York to design their building at Chicago. So your business, you are constructing one office, corporate office in Chicago, and you have appointed one architect of New York. You are basically Indian-based company, and you are paying $100 to that fellow. Supplier of service outside India, architect is New York. Yes, this condition is met. Recipient of service located in India because your corporate office is in India and you are making payment $100 from India to that fellow. Yes. The place of supply, immovable property situation located. I am going to previous slide to refer the provision. Immovable property located is the place of supply. Immovable property located in Chicago. Thereby, the 211 import of services definition, place of supply services, place of supply of services is in India is not meeting. Thereby, no IGM, no RCM, no IGST payment. Now, other example, in the same bunch of immovable property, Indian-based company has appointed architect of New York to design their building at Mumbai. Your corporate office is constructing one building at Mumbai, or you are constructing one plant in Mumbai. You have recruited, you are in India, but your architect you have recruited from New York, and you are making payment to New York fellow, architect fellow. Immovable property situated in India. Thereby, supplier of service located outside India, architect is New York, recipient of service located in India, yes, in India, place of supply where immovable property is located, that is in Mumbai. Therefore, you are required to pay IGST under RCM when you make $100 to that architect who is situated in New York. One exception in immovable property we need to see. That says when supplier and recipient both are situated in India, in that situation, though the property is situated in New York, say for example, you have given, I am a suppose architect, you have given me service, I am sitting in Ahmedabad, you are sitting in Surat, you have given me order to Sriram Kaja, Ahmedabad. Being an architect, I am providing architect services. Suppose you are in Surat, I am in Ahmedabad, but the building is in Mumbai, building is in Chicago, USA. In that case, the immovable property, though it is situated in New York, but there is some special provision they have made in section 12, not in 13. Please note. It says when supplier and recipient both are in India, then you should not see immovable property location. You should see the location of the recipient. Therefore, I told you in the beginning, initial stage of our discussion, I told you each and every transaction clinically we need to apply place of provision rules. We cannot use our common sense, we cannot use our experience, we cannot use our logic. Otherwise, what will happen if you don't refer 12.3 and is simply based on this 13.4? It says immovable property location, but that exception they have provided in 12.3. This is separate session. If you miss this session, you feel it is always Chicago, immovable property is in Chicago, so don't worry, no RCM. But it is not so, because this exception says when both are situated in India, RCM will trigger. Now, there is some other session within session 13, subsession 5, 13.5. It is talking about event-based services. When you received event-based services and when you pay money $100 to that event purpose, when you have taken event services, whether RCM will come or not, place of provision says that session says event actually held is the place of provision, place of supply. The place of provision is event actually held. Let us see the example. Indian Pharma Company participated in pharma conference at France, organized by society in France. Remember, organized by society in France. But you are in India, you are making $100. Pharma conference, where pharma conference? Pharma conference is in France. Supplier of service located in India? Yes, pharma conference is at France, outside India. Recipient of service located in India? Yes, India. Place of supply organized by society at France, because I am going to previous slide. That proviso says event actually held is the place of supply. Event actually held is the place of supply. What is the actually held? Where it is held actually? It is now in this example, it is in France. So thereby no RCM, no IGST liability. In the same bunch, we will see reverse situation. Indian Pharma Company has participated in pharma conference at India, organized by a society in France. But pharma conference, where is the pharma conference? That conference is at India. Company किधर का है? India का है. You are making $100 to that organizer, that society in France. Supplier, yes, France. Recipient of service in India. Place of supply, pharma conference is at India. Because again, I am going to make you understand. Again, I am going referring that event actually held. Where event actually held? It is in India. In this example, it is in India. Thereby, in this situation, you are required to pay RCM on those $100 and under IGST. You need to pay IGST. Another example. Transportation of goods, destination of goods. It says supply of services, transportation of goods other than by way of mail or courier shall be place of destination of such goods. You see the provision, the lawmaker, it is not a new service, that's maybe more or less it is a similar, but just I am highlighting because that opportunity has come us now to discuss. Therefore, I am telling you, you please see the beauty of the GST law. When you are paying services charges on transportation of goods, they are talking destination of such goods. So your liability on transportation of goods, whatever money you are paying to transporter is depending on destination of such goods. It is not depending on transporter or not depending on you. It depends upon destination of such goods. Please note. The provision is applicable both import and export of goods. I have given because to make you understand, today is our subject is not export of services or export of goods. It is import of services. But I have given this provision is applicable import and export of goods to make you understand. This is basically to decide place of supply of services of transportation of goods based on destination of goods. That means IGST under RCM is triggered under import of services category only in case of importation of goods. You understood? If it is not importation of goods, because destination of such goods, where destination of such goods and you are required to pay IGST and RCM will happen? Tell me. Because destination of such goods should be in India. If destination of goods outside India, then this provision will not trigger. This provision will trigger destination of such goods. So destination of such goods when will happen? When importation of goods will happen. Otherwise, destination of goods cannot happen in case of exportation. So, to give you in summary form, 13(9) transport charges whenever you are making payment to outside India person, the destination of such goods, that means importation of goods, only broadly it covers, broadly, but we will discuss. Transportation of goods, destination of goods through ocean. Ocean, we will discuss three: ocean, air, road, because this provision covers three. So first we are dealing ocean. Indian-based company has appointed shipping lines based at Singapore for transportation of goods to USA, export of goods Indian under a CAF contract. Here is the transportation related to transportation of goods, the place of supply, destination of such goods outside India, USA. Supplier of service located outside India, yes, Singapore. Recipient of service located in India, yes, in India. Place of supply service is in India. Destination of goods is USA. So, when destination of goods is in USA, then it is not for discussion. Because destination of goods in India, in case of importation of goods, then only this will trigger. Otherwise, it is not discussed for destination of goods when it is USA, then it is not the discussion. Because this proviso will trigger destination of such goods. Now we will see actual example of import of services situation. Indian-based company has appointed shipping lines based at Dubai for import of goods in India under FOB contract from Dubai. That means for importation of goods from Dubai under FOB contract FOB related to what? Importation of goods. The FOB contract between you and your supplier is under FOB contract. Thereby, your responsibility to bring those goods from that country to your country in India, your factory in India, because it's a FOB contract. The supplier you have made with the FOB contract. So you are required to approach shipping lines separately because it's a FOB contract. So you are requested shipping lines in Dubai. भाई मेरा माल उधर से लेके इधर लेके आओ इंडिया में, because the shipping line is situated in Dubai. But you are having factory say Hazira. Destination of such goods. Supplier of service located in India, outside India, Dubai. Recipient of service located in India, yes, in India. Place of supply of service in India. Destination of such goods, because it is import of goods. Always. Otherwise, this will not trigger. Therefore, RCM liability, when you pay to Dubai fellow $100, you are required to pay GST and RCM. Now, second situation. Let us analyze the ocean quickly. In case of freight forwarder situation, importer importers are located in India, domestic services, import goods. Freight forwarder and importer are located in India. FCM, freight forwarder and importer in India, not being import of services India to India services, provision 12 it will trigger, not 13.9. These two I have given to make you understand when this 13 will apply, when 13 will not apply. Because when both the freight forwarder and importer are located in India, then it is a domestic service. We should not discuss on this because our topic is import of service. Domestic service anyway they have to pay. You understood? When FCM, ocean freight forwarder in India and importer is also in India, that time also it is not required. Ocean freight. So this will trigger when further. When it is a FOB contract, freight forwarder is outside India and importer is in India, then RCM will be applicable. You understood? When you are importing goods under FOB contract with your supplier of the goods, and thereby you are compelled, you are forced to deal separately with freight forwarder, and freight forwarder is outside India, thereby you are paying $100 separately to that freight forwarder because your contract is under FOB with the supplier of the goods. Since you are making $100 to that fellow separately, then it is import of service, and import of service says, to qualify this 13.9 says, destination of such goods is in India, thereby you are required to pay in case of FOB contract. Hope you are clear. Suppose your contract is not under FOB with the supplier of the goods. You are receiving goods from USA. Supplier आपका कॉन्ट्रैक्ट गुड्स का CAF कॉन्ट्रैक्ट है अथवा C&F कॉन्ट्रैक्ट है. Freight is also inbuilt in that contract. You are not required to separately pay to freight to the freight forwarder or shipping lines. You are not required to deal separately with shipping lines. You are not required to separately deal with freight forwarder because the supplier is already having responsibility to directly those goods should send to you at your factory gate because your contract with the supplier is CAF or C&F. But there is a specific entry provided in 39 and entry number 10 with RCM notification. That notification says in case of CAF and CF contract also, you are required to pay RCM and IGST liability will trigger. Gujarat High Court, in case of Mohit Minerals, they said it is not required to pay. But practically this is better to pay and take the credit because government has already filed Supreme Court. So we should not invite litigation. Unless you are having specific issue, you cannot use your credit and blah, blah, blah other issues. Otherwise, it is my advice to pay and take the credit. Though, because there is a specific entry provided under notification 10/2017 ITR, import of services. In case of CAF and CAF also, you are required to pay because of that specific entry. Now we are dealing second, air freight. Air freight, import of goods, it is totally exempted. I have given green ink, that means green marker. That means it's an exemption. No need to worry. I have given comments. These comments will be useful to you because I have covered all other export related, import related transactions, which are not our present discussion, but I have given you as an exhaustive slide to give you complete understanding in case of air freight. But our topic today is related to import of services. Import of services in case of air freight, no issue because there is a exemption notification. It exempts. Similarly, by road, When freight forwarder is outside India and importer is in India, import of services, in case of import of services, FOB contract, you are required to pay RCM. IGST liability will trigger. Here also I have tried to give you various other scenarios which are not required for the present discussion. There is import of services, but I have tried to given you because this gives you exhaustive understanding. So I have given by way of comments. But since our discussion today is related to import of services, in case of import of services, in case of road, FOB contract, only RCM will trigger, not on CAF and C&F. Because in case of ocean, they have specifically provided entry number 10, thereby we are liable. Though Mohit Mineral said we are liable to pay. Because Supreme Court litigation is going on. Because government has applied to the appeal, filed the Supreme Court. What I have given, this exhaustive slide, what I have tried to give you, overall view of transportation of import of goods. So what I have tried, I have given import terms, mode, air, sea, road, service provider where is located, service recipient where is located, place of supply where is located. I have given green ink, that means it is given exemption. I have given the, if you see, I have made this bold. Yes, RCM, yes, RCM, yes, RCM, yes, RCM. That means in 4 situations, it is RCM payment. That is C, FOB, C, CAF, C and F. C means ocean. ACEA. And third, road, FOB contract, and road, FOB contract, where foreign GTA is there. And wherever FCM contract, because domestic, then I have given with red ink. So, broadly, import of services, transportation, you can say basically ocean, FOB, ocean, CAF or CF, road, FOB or CAF, FOB, not CAF, FOB, and FOB, Indian goods importer, where supplier service provider is in foreign. In these situations, there is a liability under RCM, otherwise no. Now, passenger transport service, whether it is air, sea, road, they say embarks on the conveyance. Let us see what is this meaning actually. Place of supply for separate tickets issued by UK-based airline to Indian customer. Journey from London to Delhi. Supplier located outside India, UK, yes. Recipient of service located in India, yes. Place of supply, London, because tickets issued by UK airlines. What this provision says, in case of passenger transport services, embark on the conveyance. Embark on the conveyance where it is. In this example, it is London. Thereby, no RCM liability. Let us see the other example of the same. Tickets issued by the UK-based airline to Indian customer. Now, UK is the service provider, recipient in India, place of supply embarks the conveyance at Delhi, that is in India. Because in this example, place of supply for separate tickets issued by UK-based airline to Indian customer for journey from Delhi to London. In previous slide, we have seen London to Delhi. In second scenario, we are seeing Delhi to London. When it is from Delhi to London, place of supply is in India. When it is London to Delhi, place of supply is London, therefore outside India. Hope you are clear. In case of passenger transport services, the law says, the place of provision says, embarks on the conveyance. When London to Delhi, then London is the place of supply. Similarly, when it is Delhi to London, Delhi is the first place of supply. Next, in case services provided on board a conveyance, first scheduled point of departure. You see the lawmaker how intelligent he is. He is talking first scheduled point. Is the departure is the place of supply. Suppose services provided by USA based company to Indian customer on board a conveyance during the flight USA, then Dubai, then India. That flight is traveling USA, then Dubai, finally it is coming to India. Indian fellow is there in the flight and he has taken few services on board. Then supplier of service located in India, USA, yes. Recipient, India. Place of supply is USA because this law says first scheduled point of departure. First scheduled point of departure on board services is the flight started from USA, then Dubai, then India. So it started USA. So outside India, no place of supply says no RCM, no IGST payment. Now we will see reverse example. Service provided US Airlines supplier to Indian passenger recipient on board a flight having route India, then Dubai to USA. That means you are traveling to Dubai, then USA. Because that flight is going India to Dubai to USA. Destination is USA. Then first scheduled point departure is in India. Thereby, if you have taken any services on board, then you are required to pay IGST under RCM. Supplier, USA. Recipient, India. Place of supply, India, being first scheduled point of departure. So, place of provision supply, different rules, different provisions we have discussed. Now that place of provision matter is completed. Now we are discussing other part of the import of services. What is the valuation? Valuation is as per section 5(1) of the Customs Act will apply for valuation of import of goods. But however, in case of import of services, section 15 will prevail. So in case of import of services, the valuation will be as per section 15 of CGST Act. Please remember. Royalty, licenses. If you have paid any royalty at the customs, then there is an exemption for royalty and license fees. Valuation in case of import of services, suppose withholding tax, suppose $100 you are required to pay because of that international tax law says you need to deduct 10% and you need to pay only $90 out of 100. Still, IGST under RCM is required to pay full value of 100, not 90 rupees. That income tax purpose, withholding tax, you have deducted rightly and you are ultimately making payment 90 to that fellow. That is true from income tax angle, you have complied that. But from GST angle, RCM, you need to pay, invoice is $100, so you are making payment, though it is 90, 10 rupees you are withholding tax, you are making separately, but still you are required to pay full $100, not 90. Now similar situation may happen. Suppose grossing up situation. Suppose 100, so that foreign supplier says, boss ये मेरे को $100 चाहिए, आपका मेरा agreement $100 है. I am not bothered whether you deduct tax this that is your problem. I want net $100, that's all. So in that situation, what you will do? Normally, $10 you pay from your pocket, that withholding tax. In that situation, please note, you need to discharge liability not on 100, it's RCM, IGST on $110, not $100. Then what is the time of supply in case of import of services? Time of supply is date of payment in the books of accounts or 60 days from the date of issue of invoice, whichever is earlier. This law, more or less same law, even in case of service tax regime also. In case of payment, as entered in the books of account of the recipient or the date on which the payment is debited in bank account, whichever is earlier, or date immediately follow the 60 days from the date of issue of invoice. Even if you make advances, in that situation also this will apply. Suppose you say, I have given advance, but I have not taken services. Then what will happen? You need to apply refund. You cannot take input tax credit because this is separate subject. When we deal ITC, that time we will discuss. But I give you some hint. Please note, this is very important. Section 16(1) says ITC is available when supply is made to you. That means you are making payment, but you have not received supply. Then ITC is not eligible. That very important point you need to keep in mind. So if you pay any advance, I have paid advance, I have complied RCM, IGST complied pay kar diya, so I am eligible ITC? No, you are not eligible for ITC. You need to apply for refund. This important point you need to keep in mind, and we will discuss when opportunity comes in detailed manner, because most of the people are missing this important point. They say, suppose I have imported goods, customer has given free, but I am required to pay at bill of entry, I required to pay goods. So I have paid at the port. So I am eligible for taking the ITC. No. The answer is no. Because 16(1) specifically talks when supply made to him. Supply means there should be consideration. Supply means sale, barter, transfer, etc. Then only it is supply. Otherwise, it is not supply. Simply you have paid at port or simply you have paid RCM for advances, you are not eligible. There should be supply. This is the peculiar law, GST, very complicated matter. Unlike excise and VAT. In case of excise, manufacturer is eligible. There is no linkage except manufacturing. But in case of GST, supply is inevitable for taking the credit. What is the time of supply? In case of associated enterprises located outside India, then the date of entry in the books of accounts or date of payment. This is when you have received services from associated enterprises. Exemptions. Exemption on import of services broadly. Individuals, already we have seen, we have discussed. In case of individuals, certain exemptions are given. 12AA, that is registered under 12AA of Income Tax Act for charitable trust. Please note, it is exempted, section 12AA, but it is not all 12AA charitable trusts. They have defined those trusts in the notification 9/2017, those services only when you are dealing particular charitable activities as defined under 9/2017, then only it is exempted. It is not like that I have obtained section 12AA income tax certificate, income tax में मेरा ट्रस्ट है, ट्रस्ट का अलग वार्ड में होता है, अलग मेरा ट्रस्ट का डील होता है, मेरा असेसमेंट बराबर होता है, मेरा ट्रस्ट का मैं सर्टिफिकेट लेता रहता हूं. नो, आप लेते रहो, आप ट्रस्टी है, इनकम टैक्स में आपको मिलेगा, बट जीएसटी में नहीं मिलेगा. They are specified. For those cases, if you are importing services, it is exempted. Hope you are clear. Educational institutions, import of services, exempted. But up to what? Preschool education, and education is a part of approved vocational education course. These two are exempted for import of services. If this fellow educational trust, institute, preschool education, up to higher secondary school or equivalent, if they import any services, then it is exempted. I have tried to give you void services other than void services. Other than void service means our regular business. Because these two sometimes gets vary, so it is important for us to distinguish. UNO, non-taxable, a person located in non-taxable territory, exempted. You cannot charge also. United Nations, international organization, if they receive any import of services, exemption. Diplomatic mission, consular, if they receive any import of services, exemption. Any person receive transport of goods, already we have discussed. Aircraft place outside India to port in India, this we have discussed in case of transportation of goods, exemption. Any person, but only if services receive transportation of goods by aircraft vessel from port in India to place outside India. This is export of goods. Export of goods. It is exempted. Reserve Bank, if they receive any import of services, exempted. So really not much in case of import of services except air freight and ocean, because rest of the elements are not much relevant for us. And charitable trust you need to keep in mind. For business, you can exemption, real exemption is aircraft, import of goods, and ocean, export of goods, and air, export of goods. So air overall exempted. Ocean accepts FOB and CAF importation, rest exports are exempted. SEZ, if any services they import any services, exempted. If EOU imports any services, IGST payable by EOU, like DTA, no difference. I have red marked related to import of services. So if EOU imports any services like DTA, they are required to pay IGST, RCM. Imports by SEZ, exempted. RCM by SEZ, exempted. So any imports by RCM by SEZ, exempted. TCS is basically tax collection. In case of import of goods, you are making any payment to foreign supplier, you need not deduct. No TCS by e-commerce operator. Merchanting, suppose you are getting some services from Mexico and you are given to USA based company, those services you are in India, the money which you are paying to that fellow to USA, suppose you are giving services to USA, but you are obtaining from Mexico, the whatever amount you pay to Mexico, those services are given to USA, still you are required to pay. It is not like that Mexico से USA चला गया, मैं इंडिया में आया नहीं है, तो there is no issue. ऐसा नहीं है, because when you are doing merchanting transaction, you are making final bill from India on USA, including that Mexico amount, then you are liable. When India is involved for making the payment, then you are involved. Import of goods, import of services, these two are different concepts. Import of goods, already we have discussed. I have tried to give you some tabular form. Import of goods and import of services. Compliance, self-invoice you need to raise in case of import of services. GSTR 1, no column fill up the regards to import of services, there is no column. However, table 3.1D of GSTR 3B, you need to mention import of services. Serial number you need to declare in GSTR 1. Payment voucher you are required to raise as and when advance payment is there. Serial number of the payment voucher is required to mention in GSTR 1. Time of supply you need to keep in mind. credit. However, our RCM, input tax credit, the same can be taken by the recipient if otherwise not. RCM, after discharging RCM, reverse charge RCM, credit of input tax of the same can be taken by the recipient, it is otherwise not. Entry registered persons required to keep maintain records. RCM can be paid from credit. The answer is no. RCM is always required to pay from cash, not through credit. IGST, import of services, payment through cash. Registration, suppose you are healthcare services, but you are importing certain services. Healthcare services are not falling under GST law because it is a totally out of GST law. It is exempted. You are not required to take any registration. However, being a healthcare services, if you are importing any services, please remember you need to take registration. So you cannot decide based on the category of the finished goods or finished services provided by the your client. It is important whether they are importing any services, then they are liable. Registration is required to be taken. Any foreign government registration like US FDA fees, registration fees, and question of import of services, in this situation, IGST is payable. In case of import of services by SEZ, already we have discussed no payment. So, Indian government, any services, then it's a separate issue. But foreign government, you need to discharge IGST liability. There is a understanding, there is a market understanding. If it is a government, no IGST payment. No. IGST is payable when it is you are paying to outside country, foreign country government officials for US FDA or registration fees or something. GSTR 3B, inward supplies liable to reverse charge, you need to mention 3.1 of table. GSTR 3B. Eligible ITC, import of services, you need to reflect at the table number 4. In GSTR 9, annual return, table number 6, details of ITC availed during the financial year, import of services, you need to refer, but this is excluding inward supplies from SEZ. Miscellaneous concepts, circulars related to import of services, these are important. You can refer whenever you get time. Thank you. Arunji?
Thank you, sir.
Thank you, sir.
Now we are having question answer session. If any participants having any question, kindly kindly unmute yourself and ask the question, or put your question in question answer box or chat box.
Hello.
Yeah.
Sir, good evening, sir.
Very good evening, ji.
I have a small doubt.
Yeah, please.
My company is in US.
Sir, थोड़ा audible, थोड़ा voice थोड़ा बढ़ा दीजिए, please.
Haji, my company is US-based company. In headquarters is US.
Sorry, your company?
My company is US-based company.
Yeah.
And headquarters is New York.
Exporter?
Headquarters, head office.
Okay.
In New York, they pay the US FDA fees from the headquarters to that US FDA government.
Yeah.
And visit the FDA visit is India company.
Yes.
On that cases, we need to pay this
You are reimbursing? Are you reimbursing that to that office? Because
Yeah,
normally what happens, they pay, but they get reimbursement from you in general. I am talking.
I am not paid any amount for the USFD amount. I am not paid with my parent company.
So no issue, no issue. See, ultimately, you are not making any reimbursement, no issue. But normally, I tell you, normally you can verify if it is true, then no issue. But normally, what happens at the subsequent period, they ask for reimbursement because it is related to Indian business.
Oh,
You
okay.
in your case, if you say it is not, they are not charging on you, then no issue. But just check it. Once it is
Okay.
better to check it.
Okay. Thank you.
Yeah.
Hello.
Yeah, please.
Sir, I have one query.
Yeah.
My company is Indian-based company. It is a
Yeah.
software development company. It provides a service through a website for development of service software.
Yeah.
Why development of software? They received a payment in dollar on their website.
Yeah.
After receiving payment in dollar from that website charges some commission or consideration. Is that consideration treated as a import of service?
Yeah. Of course. Of course. Because you are raised your bill $100, but actually you are getting $98. $2 is their commission. So you are making payment to
Yes.
$2. It is an import of service.
But my software development is for export of services
True. 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 It's
because it is
true.
US based company.
It's I understood. You rightly said, because the discussion, what the question you are asking is, you are $100 you have raised the bill, you are not importing. But what happened during the exportation of the business, you are actually paying $2 to the developer, the website developer. So $2 you have received the service. $100 you have raised the bill on your customer, but that customer has paid 100, but ultimately you are getting 98 because two you have paid. It is not reflecting anywhere, but this is the business
But
understanding.
in that case,
Yeah.
but in that case, in that case, with the third situation, where the service is not outside
Sorry.
India
सॉरी,
because it
आपका
is
वॉइस
US
कट हो रहा
based
है,
website.
बोलिए क्या बोला? आपका लास्ट लाइन बता दीजिए फिर से.
फॉर जो अपना बेसिक थ्री कंडीशन है,
हाँ.
बेसिक थ्री सिनारियो जो कंडीशन में फुलफिल होना चाहिए, उसमें थर्ड कंडीशन जो है
हाँ.
कि इंपोर्ट ऑफ सर्विस, प्लेस ऑफ प्रोविजन ऑफ सर्विसेज
32 में आएगा ना. बट व्हाट हैपेंस, इसमें आपका 32 डिफॉल्ट प्रोविजन ट्रिगर होगा ना. आपका जो स्पेसिफिक सेशन में तो फॉल नहीं
बिकॉज द
होगा.
वेबसाइट इज लोकेटेड.
सॉरी,
ओके,
आपका 13(2) जो डिफॉल्ट प्रोविजन है ना, डिफॉल्ट प्रोविजन ट्रिगर होगा ना.
हाँ,
इसमें रिसिपिएंट ऑफ द लोकेशन इज द प्लेस ऑफ सप्लाई.
ओके, ओके, थैंक यू.
या.
Yes, anyone having question? So I think there is no more question from participants. So here we conclude, sir.
Yeah, sure. Thank you. Yeah, please.
Yeah, I would like to thank our today's speaker, Sriram sir, for giving us insight on import of services with various examples, sir, and also enhance our knowledge to the next level on this topic, sir. Thank you so much for this wonderful session, sir.
Thank you very much. Thanks to you all also, all also. Actually, you have participated on Saturday. It's a very good actually.
Right.
Your Surat branch is always shows very enthusiastic and energetic.
Thank you so much, sir. And I would like to thank all the participants for their patience, listening, and learning. Thank you all. Thank you, everyone. Thank you, sir.
Yeah. Thanks to all participants and committee of Surat CA branch.
Thank you.
Yeah. Thank you. Happy weekend.
Thank you, sir.